Let's make a start. As people are joining, we'll just go through our intros, and as everybody arrives, we'll get into our main debate. So welcome to this session on how cash should potentially look in the future. And some of the talking points that we'll go through about this will, for example, be, will paper money be around forever, or will it be replaced by another form of cash? And indeed, what even is cash? And what are the differences between a cashless society and a less cash society? And how do we see that impacting payment systems of the future? And indeed, what role does cash play in financial inclusion? And what are the considerations for payment systems in this regard? So look, my name's Tim Tyler. I'm a global industry principal at Finastra. My great pleasure to be here with you today, being joined by Lesego Mashigo from FinMark Trust, Richard Ketley from Genesis, and also through the powers of modern technology, we'll be joined by Olaotse Matshane from National Treasury. Before we get started though, I just wanted to make a couple of points. Cash continues to be king. Research has shown that 90% of people receiving social grants withdraw all of their funds as soon as they get it. And whilst most people in South Africa have a bank account, the use of cash is not only widespread, but also continuing to grow by about 6 to 10% every year. Cash offers a number of benefits. It's a low-cost, simple payment method, and it can be used straight away. Other payment methods are perhaps hindered by factors such as the lack of acceptance of cards or mobile payments, particularly by informal traders. But cash also has wider drawbacks, not least of which is the cost. Clearing and physical cash management on the bank side, whilst for consumers there are fees they have to pay to access their money. A MasterCard study estimated the cost of cash for consumers to be around 23 billion rand per annum, and those costs are disproportionately carried by low-income earners. Cash also carries the risk of theft and quite possibly the travel times that might be involved in getting access to it, the trip to the ATM. So how do we move away from cash? And indeed, should we? In 2018, the South Africa Reserve Bank set out its Vision 2025, outlining how it would achieve goals such as encouraging digital payment methods and supporting financial inclusion. This was to be done by boosting consumer trust, but also key familiarity with electronic payment systems. And due to go live next year, the Rapid Payments Programme is seen as a game changer in the market. The programme, intended to make low-value transactions faster and more cost-effective, will enable instant digital payments between banks, as well as allowing users to access request to pay. But here's my question. Is it enough? Before opening to the panel, and that's the panel we have here live with us today, I put a question to Olaotse Matshane from National Treasury about how close are we to moving to a cashless society. Let's hear what she has to say.
These conversations about what does the future of cash look like have been going on for a number of years now. And well, firstly, we don't know what the future looks like, but I think we can imagine what the future of cash would look like in the future. So first of all, depending on which country you are, if you are in Canada or in a country like Sweden, you could probably start imagining a future of cashless communities. However, in a country such as South Africa, it's still a long way to go for us to be imagining a cashless community, but certainly I think we are moving slowly towards less cash that we see in our communities. But so furthermore, just to substantiate my answer, I think let's start looking at what are the benefits of cash. And these benefits, some of them are perceived and some of them are real. Cash is immediate, it's easy to use, your privacy is protected, it's convenient and it's universal, it's accepted almost everywhere. There's general trust around the use of cash. And you don't need to worry about having a smartphone in order to transact. You don't need to worry about access to the internet or access to data. So these are just some of the benefits of transacting in cash. Therefore, unless your digital payment alternatives can compete with these perceived or real benefits of cash, we still have a long way to go to even imagine a cashless society in South Africa. However, what we have seen is a rise in digital financial services, a rise in digital payments, and therefore use of less cash. However, I think there's a paradox that similarly, we are also seeing increase in circulation of cash at the same time that we are seeing an increase in digital payments and in electronic payments. So in South Africa, yes, a community with less cash, but really over time. And as I've said, unless the digital alternatives really challenge these benefits that accrue to the users of cash, we still have a long way to go.
So for me, that sounds a bit of a dilemma. Olaotse has just described, I think, not how successfully we're moving to a cashless society, but an awful lot of barriers to moving away. You know, cash is immediate, it's easy to use, it's convenient, it's trusted, it respects privacy. Lesego, I'm turning to yourself first. How on earth do we think about overcoming those barriers? You know, a couple of them in particular, you know, the immediacy of it, the acceptance of it, but also, and maybe we'll focus a bit in a moment as well about privacy. What's your view? How do we ever look at getting past some of those barriers?
I think, particularly in the South African context, it's a combination of things. I think for me, at the forefront, it's not even the fact that cash has benefits, but also the fact that you need to educate the consumer on the alternative, right? So the benefits are there now because that's what you're used to using. You do not have an alternative, and you probably do not have an alternative because in the community in which you reside, you do not have the right infrastructure. And I think, as Olaotse was mentioning, that you may not have the smartphone that is required for you to use another means. You may not have a card or a bank account that is required for you to use alternative means. But also where you have an alternative, you probably do not have a merchant that's able to accept your card or accept your phone, etc. So I think the barriers actually start at, for me, it's from an infrastructure perspective in South Africa. It's trying to understand what are the levers or what are the infrastructure challenges that we need to address. But moreover, also from an individual or a consumer perspective, it's trying to understand what a consumer needs, and if it's cash that they need, what type of payment solutions do we then develop that mimic cash? So that speak to the fact that it's immediate, the fact that I trust it. And how then do you build the trust? Is the trust from some consumer awareness? Is it from consumer financial education? I don't think you and I, Tim and Richard, would know. I think for me, it starts with speaking with the actual consumer and saying, what do you need for you to trust different systems?
And I love one of the phrases you use there, Lesego, and I'm going to jump on it and throw Richard in at the deep end with this one. It was about how do we mimic cash? You know, I think that's a great way to describe the challenge, actually, because, you know, when we talk about inclusion, when we talk about education, when we talk about adoption, it is about the user journey. If we take it back down to the technology basics, it's about user experience, customer experience, the user journey they go on. Richard, is this a challenge that's surmountable, do you think?
I think so. I think we've seen, you know, with particularly the launch of Samsung Pay and Apple Pay and people using tap on their phone, we actually have found that consumers globally actually find this to be faster and easier to use than messing around in your wallet. You know, so the chances are you had your phone in your hand anyhow. And so we finally are in a world where a tap payment is actually faster than messing around with cash. And that's always been the challenge. It's literally, it's better and faster than using cash. So we know we have got a better experience of payment than using cash now available to many consumers. The second question, I think, is around the acceptance infrastructure. And in South Africa, this is now changing very rapidly. We're seeing, the new, the kind of fintechs like Coca, Yoko, coming in and really growing their merchant base very, very rapidly. And, these merchants, from my experience, are at the bottom of the pyramid. And, you can now go online on an e-commerce site and buy a point of sale for 300 Rand. This is a very, very different environment than we had 5 years ago. So acceptance is improving very rapidly, and the means to pay is now superior to cash. So two things are coming together quite nicely for some consumers, and more consumers. And I think for me, the issue is just how quickly things are now changing globally. If you looked at the cash monetary aggregates in the UK, for instance, they were gradually drifting down until about 2017, and then they fell off a cliff. And the same, and the question is whether this is going to happen in other countries. Interestingly, when we think of digital payment in Africa, we always think of M-Pesa and Kenya, and there, interestingly, the monetary aggregates are not falling off a cliff, or the cash aggregates are not falling off a cliff. And that is, I think, largely a pricing issue, that when you want to do very small transactions, cash is much more affordable to the consumer. And so although you have a lot of digital payments, you still have a lot of cash in, cash out at lots of dukas and small merchants across the economy. So for me, the question is, when I was driving somewhere this morning, I saw a lady on the side of the road selling eggs and peanuts. And, this person has a business, and I can't engage with that business because I never have any cash. And so does that person in China wear a QR code around her neck? And if so, then cash doesn't have a future. If not, then cash will have a future in South Africa for many years.
Well, I'd also like to pick up a point that has been made in the chat by David Makondo. And I encourage everybody who's listening, if you've got a point you want to raise, if you want to join in the conversation, please feel free to throw questions and comments into the chat, or indeed volunteer to come on camera and engage. And I think that for me, there is this adoption, and you've got to have both sides of the coin, that network effect for this to work. But typically we trust banks, I think. I'm fairly sure on the whole we trust banks. They have this aura of trust about them. But clearly we don't trust them too much to leave our cash in there all the time. If we're constantly withdrawing it, we want our hands on it. Where is the trust dial going to land in terms of, who's going to own this digital payments future? Is it going to be a national institution that's got the government rubber stamp behind it? Is it going to be a new entrant? Is it going to be big tech? You mentioned Apple Pay, there's Google. Where is this going to go that we think will get acceptance by consumers? Lesego, what do you think to that?
Does it not start with you and me? So trust for me, as much as, and I think you mentioned that we trust banks. Do we really trust them? Another question you asked is that when we do trust them, why then do we withdraw our money? Is it because of trust that we withdraw all our money? In my opinion, it's not. It might be because it's not enough for me, or the amount of time that I will need to travel to a bank or an ATM for me to withdraw money, and the amount of money I will use for that is costly. Therefore, I choose to withdraw all my money at a particular point in time and keep it with me. But I think the trust conversation starts with, and again, I go back to, because of the work that we do and understanding that the consumer needs to be at the forefront, and you need to understand what the consumer needs and what the consumer wants to do, but also how the consumer wants to interact with financial services. So for me, the question of trust is also understanding, for you as a consumer, to trust the institution. What is it that we need to do? Oftentimes, I think we sit in these forums and we talk, and I think we talk on behalf of people that we're not in their shoes. We don't walk in their shoes. We don't understand what it is that they're looking for in order for them to trust the system. I mean, I have, and I think it's something I use all the time. When I speak to my mother, I'll say to her, but why don't you use your card? And she says her money will disappear. And it's not disappearing. It's again, education to say, your card carries fees. Your card carries certain things, and because when you use it, these will be charged against you, then it does not necessarily mean that your money is disappearing. It's not. It's actually because of the way that you use your card that you think your money is disappearing. So it goes back to interacting with a consumer and understanding what the consumer needs, but also I think at the lower spectrum. So when you speak to the low income consumers, it's also understanding. I mean, I think, Richard, you mentioned a very important point to say, you have the eCockers, you have the Yokos of this world that are coming in, and they providing these services to merchants. But is it all merchants that are taking them? I mean, the FinScope survey, MSME, that we just recently launched indicates that MSMEs pay their employees in cash. They accept, I think 60% of them accept payments in cash, which means they don't have, and when they do have a point of sale device, it's only about 18% of them that actually have that, which means there's a gap between what we think is there and what is actually there, and what is actually happening in communities, particularly disadvantaged communities. So I think the trust matter, Tim, it's an engagement between the financial sector, it's an engagement between the consumer, but I think it's also an engagement between I as a consumer and another consumer.
Excellent, thank you, Lesego. Richard, before I come to you, the wonder of this platform that PIPC are using, we've got some fantastic comments coming in that we can all see, but I've also got the ability to pull people into the conversation live. And I think we've got Benjamin April who wants to come in and make a comment. So, and he's just disappeared off of the link. So having done that, that's the joy of live, I guess. I think there's been some wonderful comments actually around, people want to see it and smell it in terms of cash. So perhaps it's not just that underlying trust. It is also wanting to, it's that physical nature of it. But there's also comments around, and actually tying into what you said, Lesego, really getting into the mindset of the consumer, getting into the mindset of the people who are using and relying on cash and understanding why, I guess, challenging that why. And Richard, moving over to yourself, do you think there's any particular underlying drivers that haven't been looked at? What are we missing? If the use of cash is still increasing, as that stat said earlier, 6 to 10% each year growth in South Africa of the use of cash, what tricks are we missing?
So I think, and thanks for the comments. I particularly liked Chris and Kevin's comments. But so I think in South Africa, we do have very important choke points around the use of cash, principally in the taxi industry. If you are a low-income South African, you're using a taxi most days, and you don't have any alternative but to use cash. And if you need cash for the taxi, then you tend to need cash, and then you use it in other spaces. So what we've seen in other markets, particularly around transport, is that transport is a critical choke point. Once you move transport into a digital payment, a tap payment environment, you get a big transformation. I mean, this happened in the UK from 2016 onwards. So you've got to deal with the choke points. Other comments around Samsung Pay and stuff being elite, and I agree entirely. However, we do know that we now have over 100% smartphone penetration in the adult population in South Africa. So that's an enabling world that is now in place as well. And then I think a lot will come down to pricing. We haven't seen a fundamental reform of pricing in the market in the last couple of years. We know there's a pricing review being conducted at the moment, and we don't yet know of the pricing of the RPP platform. So if we throw the ball forward and say 5 years from now, we have RPP at a price that makes it cheaper for consumers and merchants to make a payment than using the current card infrastructure, we have lower prices across the card infrastructure, as is the trend globally. And the trend that's already in the FinMark or the FinScope data, which shows that more and more people using their debit cards every month, we might be in a very different environment. And one of the key statistics I always watch in the FinScope data is the question: have you ever used your card as a debit card? And remarkably, I think in 2012, something like 80% of people had never used their card as a debit card. And I think that figure's now down to about 40%. So these are, as I think you mentioned in the introduction, these are people who probably receive a social grant. They go to an ATM, they take the cash, and then they live in the cash economy. Those people are increasingly aware and familiar with the idea of tapping your card at a merchant. And so that's a very important trend to continue to watch as we see how we move along this path.
Just coming back to the Samsung Pay and what have you as being elitist as well, and actually tying in with the price review and what the pricing of all of this is, and I guess the impact of that on the consumer. Another question I put to Olaotse was around what role does cash play in financial inclusion, and that's sort of speaking to that part of the demographic. Let's hear what she had to say on that particular point.
Cash and financial inclusion is actually quite an interesting conversation. From where I see it, cash is usually a transition and it breaks the divide. So it's a transition from exclusion into inclusion. So it's usually your first step towards inclusion. It has to be cash. Unless you've got access to cash, you are completely excluded from the economy. So let's remember, what is the definition of financial inclusion? Financial inclusion is access to useful and affordable financial products and services that meet my needs to either transact, to either be able to pay, store of value, access to insurance, and access to credit, for example. So ultimately, even though cash is your transition from exclusion to inclusion, once you are included in the financial services sector in terms of accessing these products or services, indeed, the next step is to say, how then can we move you as a consumer to digital financial services? So digital is definitely the next step, but cash is an important entry point. And to get it right with regards to cash and financial inclusion, I think the infrastructure in the economy needs to meet these three requirements. Firstly, it must be easy for me to go and deposit this cash that I have in my hands anywhere and at no cost. When I need the cash, again, it needs to be easy for me to access the cash, again, very easily and at no cost. And then also the third requirement is the merchants where I trade and where I transact, they should be able to accept this cash, again, at no cost and very easily. So again, just in terms of the future, I think cash and digital, at least in South Africa, will continue to exist side by side. And we need to ensure that the infrastructure, as I said, also accommodates a cash economy and a cash cycle.
So the challenge I have in my mind, if going on what we've just heard about, the first step to financial inclusion is cash. And yet we believe the future is at first maybe a less cash society moving to a cash-less society. Are we baking in financial exclusivity by moving in that direction? Lesego, am I barking up the wrong tree, or is that something that we've got to be concerned about as we move forwards?
I think, and I mean, I like the fact that, so as we move to digital, what is this digital and what does it look like? Does it require that I need to adhere to FICA requirements? Does it require that I need to have some form of or money that I can deposit in a bank account. Is it regular? If I don't have money for 3 months, will I still have access to that digital environment? So I think as you graduate to digital, it's also understanding that people's circumstances are different at all times. And when we create solutions, what do those solutions look like? And are they able to address my needs as an individual, but also my needs where I do not have certain things that are required in order for me to access these digital platforms? So if I go to a bank today, I need to be figured, and that's the law. But how does it happen? And what are the things that you require for me in order for me to be banked, or in order for me to have a transactional account? And I think those are some of the things that we need to think about to say, for you to gradually move along this and for you to be financially included, you need to think about, as you move to the digital environment, what are the requirements to the person in order for them to transact digitally? And are those requirements the things that then stop a consumer from wanting to engage with the formal financial sector? Or are they enablers? Do they actually encourage me as a user to come in and transact? South Africa, and I think in other countries, you have migrants that live in those countries. What are those requirements for the migrants? What do we need to look at to make sure that as we create an inclusive financial sector or a payment sector, what are the things that we need to look at to ensure that actually even the person that is currently not served will be served? So I think to your question, Tim, if we don't look at these things, unfortunately, it's exclusive. It's exclusive to those that have the requirements to interact digitally.
Well, let's say, I mean, some really good points there. I do have somebody else now that's, I think, volunteering to join the stream. So Hannes Creel, I'm going to see if we can add Hannes into the conversation. And again, I think no, here we go. The system is working. Hannes, hi. Well, welcome to this live webinar. What point did you want to make to the team?
I'd just like to join the conversation, really. I think I've got the privilege of being part of the rapid payments journey in South Africa. So I think we can all agree from a cash point of view, if we want to replace cash, there needs to be a viable alternative. So, and therefore rapid payments is actually quite a big and very expensive experiment that the industry is undertaking, especially seeing that it's not mandated by the regulator at this point in time. So, it's an interesting experiment, and therefore from where we are sitting is we are definitely grappling with what's it going to take to displace cash with this platform. And some observations in terms of the research that we've been privy to through this project is, if you go and look at what happened in India after the launch of their faster payment system, so their cash usage increased. So you saw quite a significant increase in cash post the launch of the faster payments platform. Now, it doesn't seem to make sense, but then if you go and think of how cash works, and if the research also shows that South Africans on average make about 1,500 payments per year with various forms, but let's assume that's cash. So for me, once cash is withdrawn until it is entered into the formal payment system again via deposit in some shape or form, we have no idea how many times cash is changing hands. And that's where rapid payments is supposed to be playing. Now, let's assume that in India, you've started having employers paying into these rapid payment or their faster payment systems into those wallets. So you suddenly had more consumers have access to digital cash and then immediately went to an ATM to withdraw. So that's why I believe you would have seen an increase in India. Now, the challenge in South Africa is going to be, so first of all, how do you get people to trust and have a store of value or a wallet that they are happy to accept cash into? Then in that interim phase, while they're getting to trust the system, how are we going to make it accessible for them to withdraw that cash at an affordable price? And then with the existing cash in the system, how do we digitize all of that cash? And I think as an industry, these are all things that we have to solve. But the first thing still that we do need is an affordable alternative. And we believe rapid payments will be that point. But yeah, all of the things that goes around it, we still need to definitely resolve. Excellent.
Hannes, thank you very much for your contribution. Very much appreciated. Richard, Hannes made some really good points there, actually. You know, it still comes back to some of those fundamentals, doesn't it, about trust. The one thing that gets to me is that, is cash even the right? We keep talking about cash as if we've got this notion of absolutely what cash is. Do we need to change the dialogue? And actually, as part of that, and part of financial inclusion, perhaps, is coming back to the education point. And actually, you know, the way you can shift the dynamics is aiming perhaps at a certain demographic about changing their mindset. You know, are we got to be really conscious of that as much as having the technical infrastructure to support it?
Thanks. Yeah, I mean, I liked Hannes's point about how once you digitize certain payments, you might trigger a surge in cash somewhere else. For me, the really complex issue here is that if cash does become, as it were, the preserve of the low income consumer, you have a very costly infrastructure supporting, from a bank's perspective, less and less profitable consumers. So there's this, obviously within the banks, we cross substitute between segments and between channels, even if we don't necessarily want to. But, you know, the cash infrastructure is vastly expensive. And so we end up with more and more costs having to be borne by, in some way, you know, poorer and poorer consumers if they sort of remain the cash in the cash economy. And so quite how we figure this out as banks and as regulators is, I think, a big challenge.
And Lesego, perhaps to come to you a moment, because I look at, you know, I'm UK based, and I don't think I've touched cash in over a year now, and I've just done my first foreign trip in 18 months, which was wonderful. But I went from sterling to euro and didn't even need to touch cash in doing that. I mean, geographically and intrinsically, what sort of differences are there between a Europe in the geographical sense to Africa as a continent, when, as I remember 12, 15 years ago, Africa leapfrogging Europe in terms of mobile infrastructure? What are the intrinsic challenges that we've got to face that might be different, and what learnings can we take from elsewhere in the world? And I'm just going to add a bit of subtext to that as well, because, you know, it's not purely, I don't think, about affordability, and North America is a great example of that, you know. So what do we think might be the challenges that we're particularly facing across Africa in this regard?
I think it's the ecosystems in which we consumers participate in. And I like the fact that, so even when Henny spoke, he said you need to find a way for people to also then be able to get cash, which means we all acknowledge that the communities in which we reside require cash. And maybe the question is, what needs to happen in those communities in order for us to build an environment that does not require cash? We talk about trust, but I don't think trust is the only thing, right? Because what is it that we trust that we do not know and do not have? I use myself always as an example that when I'm at my house, I don't touch cash like you, Tim. I don't touch it. I don't know what it looks like. I don't smell it. I don't touch it. But as soon as I leave my house and I say, I'm going to visit my mother who stays in a township, I unfortunately have to withdraw cash, because when I go to the spaza shop where she stays, so she says, I want bread and I need to go buy bread, the merchant there does not accept any digital payment. When I go to the person that does hair, the hairdresser, in a formal place, they don't accept card. So they don't accept any means of digital, they want cash. So in that environment, unfortunately for me, I need to use cash. Worse off when I go to my grandmother's place, which is in a rural environment. Now there I don't even have signal. So even if I wanted to send you money, Tim, I wouldn't be able to send it on my app because there's no signal. So I have to wait until I come back to the city in order for me to transact digitally. So I think there's different, and it depends on where you find yourself. It depends on the environment where you find yourself. I think in the townships, it's probably more from there would be adoption if there are tools to be adopted, but those tools again should go back to mimicking cash and should not be deemed as expensive. I always say that I don't think a merchant wants to pay. So if I come and I want bread is 10 rand. And the merchant is charged 2% of that. Do they want to pay 2% for me buying bread, or are they going to pass it on to me as a consumer? As a consumer, do I want to accept that 2%? So I think it's also from a cost perspective, where you then roll out these solutions into these environments. Are they cost effective? Do they make sense to the user? And what are the things that we then need to do? And this is a question that I can't answer. What do we need to do to lower the cost to the consumer, to the merchant?
Excellent. And Richard, I saw you wanting to leap in when I posed that question to Lesego. Go for it. What did you have to say around that point?
No, I think we have a very interesting situation in most countries in Africa, where we've got essentially private closed-loop payment systems in operation in the form of mobile money. And this creates a lot of challenges, when you fly to Kenya as opposed to Amsterdam, in that you cannot engage with the mobile money environment until you've been registered, until you've funded your account. So there's a very different national regime that's emerging in most African countries. How that gets wired together to create global interoperability, which the rest of the world enjoys from the card schemes, is going to be an interesting space to watch.
Yeah, I've a number of times talked about, I think we should have somewhere needs to build like the Babel fish of payments. And for those that don't know, that's a reference to Hitchhiker's Guide to the Galaxy, which perhaps show my generation, and I won't dive any deeper into that. But I actually wanted to come back to another point that Hannes made when he was on, about RPP being a big, expensive experiment. And it's not one that's been mandated by regulation. And I actually asked the final question to Olaotse about what role can policy play with regards to this shift away from cash. So let's play that final clip from Olaotse and see what she had to say on that point.
The role of policy is a very important one, and it includes a number of things. So first of all, as policymakers, we worry about a monetary system that should be fair, that should be inclusive, that should be resilient, and that should respect the privacy of individuals. That's the kind of monetary system we want to see as policymakers. Secondly, we want to give people a selection of payment options that make sense for their individual circumstances. So protecting consumer choice is very important for the policymaker. And then there are other issues, of course, that we worry about as policymakers. We also want to protect the vulnerable from further exclusion by the digital divide. I earlier on spoke about if you are using cash, you don't need to worry about access to digital infrastructure. You don't need to worry about having a smartphone, access to data, access to the internet. So it's important that we protect the vulnerable from further exclusion. The other issue we worry about is equality. And we've spoken about financial inclusion. And one of the key benefits of financial inclusion is that it increases equality and reduces inequality. Again, we need to make sure that the consumer is protected, whether they are using cash, whether they are using digital financial services. Issues of competition are important for the policymakers. We need to ensure a level playing field. Sometimes it's never really level, but at least it has to appear as if it's level. So for the policymakers, we need to ensure that there's a level playing field for all the players in the market, whether digital, cash-based, that competition is important because competition is important to give consumers choice. Therefore, in closing, I'm going to repeat this. It is important that we protect consumer choice and that we are able to give people a selection of payment options that make sense for their individual circumstances. So in no way do we want market players to be trying to push people towards digital when they are not ready, when the infrastructure is not ready, when the digital literacy is not ready, and when really their circumstances doesn't afford them a comfortable opportunity to be moving to these digital options or digital rails. So protecting consumer choice is very important.
Gosh, I mean, is it a unachievable dream, do we think, in terms of going completely digital? And I see, and apologies for my pronunciation, Sibongile Gamid, I think, he said, it's a less cash society rather than cashless. We won't really completely get rid of cash. I'm inclined to agree, but do we think, you know, when we can address the almost, one of the notes I scribbled down then was, you know, we need to have a coming together of the physical and the virtual, or the physical and the digital. You know, if you could have a payment card which had an embedded wallet in it, so that itself was the store of value. So as you tap and go, you're not relying upon that back end infrastructure, but it can synchronize, you know, that is the store of value. Is that a world we could move to? But, you know, Lesego, is this an impossible dream?
I don't think so. I think it's a dream we can have, but it's a dream we need to have. And I think, as Olaotse was saying, so as policymakers, as regulators, as the financial sector, it's a dream we need to have, but it's a dream that needs to consider consumer needs and where the consumer is. You can't have the dream in isolation. So for us to say we will be able to be at this particular point and at this particular point at a particular time, it's important that we understand what is required from the consumer that we're trying to serve in order for us to get to that particular point. To Richard's point, there's a lot of merchants that are accepting the fintech payment solutions. It means they see a need, and it means they see a gap, and it means they know that this is an area that they need to participate in. But how then do you make sure that it's not just a selected few who understand what this does for them, but also it then trickles down to a friend who also has a shop down the road, and the other friend as well. It's a dream that we really need to, it's a journey. We need to see the dream as a journey. So it's not gonna be realized overnight. It's a journey that we're gonna have to travel. But as we travel this journey, I think it's important that we hold the hands of those that need to travel the journey with us. But I think from a policy perspective, it cannot be seen in isolation. So financial inclusion can never be seen in isolation because you need other levers in order. So you need other government departments to do certain things in order to enable the environment and to make sure that people are financially included and are able to use these financial channels or financial solutions that have been given to them. So take, for example, we talk about infrastructure. It's not to the financial sector to make sure that there's adequate infrastructure in a particular area. If there's no internet connectivity in my grandmother's place, it's not up to the bank to make sure that there's connectivity. Someone else is responsible, right? Someone else within government is responsible. So I think it's a dream that needs to encompass different players, different actors, but more so it's a dream that needs to make sure that it holds the consumer's hand and says, this is what we're trying to develop for you, and this is what it will help you with. I had a conversation the other day with a lady that I know, and she was saying to me that for her to withdraw money, it's actually cheap. So to withdraw money is cheap for her because then she will just use it wherever she needs to use it at different places. But I think when I asked her, so when you withdraw 1,000 Rand, how much do you get charged? For her, it was still cheap. But when you do the maths and you look at when you swipe your card, actually, it would have been cheaper for you not to have withdrawn your money. But because she doesn't know, she is not aware, and she doesn't know what the benefits of using digital are, she will stick to cash because for her, she thinks it's cheap. So she took a taxi, withdrew her money, now has her money with her. She will pay wherever, even at shops where there is a point of sale device, she will still use cash because she's withdrawn the money already, right? But I think it's understanding why she does that and also educating her to say, when you swipe 100 Rand, this is how much it's gonna cost you. And over time, when you swipe 1,000 Rand, this is how much it's gonna cost you versus how much you would have paid when you withdraw your money from an ATM. So it's a journey, but it's a dream we can have. It's a dream that I believe we should have and to work towards.
Before we close, and I have to be honest, I have no idea what time we're meant to finish. So we could keep talking because I think this is really fascinating. I'd like to pose the question to Richard. Government. So we talked about regulation. Lesego, you mentioned about not having mobile coverage. So really, that ought to be something that should be mandated by central government. But do you think governments, let's use the plural, are they enablers or are they a hindrance? And I'll add another qualifier onto that for you, and an example of historically Greece. Greece was a country where people just kept cash literally under the bed. And the reason they kept cash under their bed rather than in the bank is they didn't want the government to know they had it, because if the government don't know you've got it, they can't tax you on it. So have we got to think, coming back to some of the earlier points about privacy and securing what that cash is, is there wider issues that we've got to address around it rather than just the point of sale complications, as someone in the comments said about, it's also about enabling the merchants as well as the consumers to be able to operate this way. Richard, a bit of a broad question for you there, but
yeah, I wouldn't want to make some kind of sweeping generalization on the role of government. I think what is material is clearly that there is a circuit of people who would prefer not to reveal their cash income, and people who would prefer not people to see what they're spending money on, and the proceeds of crime, etc., that goes round and round. And so clearly there is an element of that. I think what's quite difficult to understand when one's designing payment systems is just how material all of that is. Again, whether as a government you should try always to design that away. What I think we do know is that merchants will respond to what consumers ask for. And so, if consumers want to pay with a card, merchants have quite an incentive to go and get a card machine. And if that card machine is now, as I've mentioned earlier, a 300 Rand investment, any merchant can get a card machine. So these kind of market dynamics, I think, do move forward quite quickly. And the level of coverage in South Africa certainly is very good now. And although I think we're moving away from access mandates from a telecommunications perspective, the rate at which the networks are enriched is happening quite quickly. I think the danger there is that the MNOs focus their efforts on hugely expensive 5G networks, which leaves the villages in Limpopo struggling along on a 2G network, whereas what I think we need is kind of 4G everywhere before we start building 5G in urban areas. But I'm not sure that that's going to happen. Well,
it's always the challenge of the bright and shiny, isn't it? Now, look, I'm being told actually we should have finished by now. So that's the way it goes. As I said, we could just keep going. I think what I'd like to do is just finish on reminding some of the points that Olaotse mentioned actually around this move to digital world, about being fair, inclusive, resilient, and respecting privacy, offering choice, protecting the vulnerable from the digital divide, and looking at digital literacy as well. I think that's a great sum up of how we should continue on this journey. And I absolutely do agree it's a journey and it's a right destination to be moving towards. So look, Lesego, Richard, I'd like to thank you for joining us, everybody that's been on this session. Thank you for the conversation in the chat. This will be available on catch up if you didn't get all of it. But from us for now, we're going to roll an end of session video. Thank you very much for joining.